Westpac sounds a warning on inflation while posting a decline in full-year profits. Medibank stands up to its hackers but admits the number of people affected by the hack is just getting bigger. And we find out that selling beer is not as recession-proof as we thought it was. It's Tuesday, the 8th of November, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, you know how we have quite a few people listening from around the world. It's not just Australia. There's listeners in the UK and in parts of Asia and also in the US. Do you think Sean Aylmer is among those listening in the US right now?
That could be wishful thinking, Michael. I'm going to say no, and because he's trying to give himself the best possible break that he can have.
Oh, I suppose, should we say hello to Sean anyway, just in case?
Yes, because there's also an equal chance he could be listening just to give us some feedback when he returns.
Or maybe we should just do it, Adam, because things have a way of finding their way back to Sean. So that if we were to say anything that was kind of cheeky about him, I'm sure he would find out anyway. So we'll just say, hi, Sean, hope you're having a great time.
We miss you.
That did not sound particularly genuine. But, you know, if he just reads a transcript, he won't be able to tell. So we're all right. Now, immediately after the show, you've got an interview coming up with Paul Presland, who is the General Manager of Small Business for ANZ. It's really all about the challenges faced by small and medium-sized businesses, particularly in what is a fairly challenging environment at the moment. And we'll have a bit of a chat about that a little later on. The main story this morning is about another bank, and it is all about Westpac, which has declared a final dividend of 64 cents a share after posting a cash profit of nearly $5.3 billion. But, and it's quite a big but here, it has accompanied its results with a warning, really, on the economic outlook and inflation. So Westpac's full-year profit was down slightly, about 1%, because of a $1.1 billion loss on the sale of its life insurance business. But there is way more to a bank result than the bottom line profit.
That's right, Michael. Banks make their money on the difference between the interest rate they charge for mortgages and the interest rate they pay to savers, and that this net interest margin is rising as interest rates go up is important. That means Westpac's core earnings were up 12% and interest income was up 7%. So that's good news for Westpac shareholders. But for the rest of us, Westpac CEO Peter King has some more sobering news.
Yeah, he says that while things look good now, it is inevitable, and that was a quote, it is inevitable that households will be hit by higher rates, especially when billions of dollars of low fixed rate mortgages reset next year to much higher interest rates. That means house prices will continue to fall next year. It also means the heat will come out of the wider economy as higher rates bite. Now, theoretically, that should be good news for inflation. But Peter King also sounded a pretty gloomy warning when he said inflation expectations were becoming entrenched.
And it's an important point. If businesses expect inflation to stick around, they are perhaps more likely to feel comfortable putting their prices up. And that just means those expectations end up becoming the reality. King summarises the economic outlook as, quote, increased economic uncertainty and volatility, end of quote, and says the bank is watching for pressures on businesses as consumer spending slows.
And just on house prices, Westpac forecasts a decline in house prices by the end of next year of 16% from their peak, and it sees GDP growth falling to 1% and unemployment rising to 4.5%. Mr. King also says the bank expects the RBA's cash rate to peak between 3.5% and 4% next year as it continues to fight inflation.
That's right, Michael, and that inflation is even affecting the bank itself. King says higher wages and other costs means it's had to drop its long-standing target of reducing costs to $8 billion by 2024. Instead, it's now aiming for $8.6 billion, and that's a big change. Analysts are sceptical that it'll even get that. Consensus forecasts are for costs of $9.2 billion in 2024.
Isn't it interesting what you learn from the banks, in particular when a bank CEO is speaking? That is pretty kind of wide-ranging, from inflation and house prices to kind of economic growth. They really kind of have an involvement in so many parts of our lives, kind of right across our mortgages and our homes and into business banking, that they're very well in touch with what's going on with the economy.
That's right, Michael. I mean, there's two principal reasons that I get fascinated by banks, and I am self-confessed data nerd. The size of the institutions, they are huge, and they are so pervasive through their customer base, through their supplier base, through their partners in financing. They see so many aspects of the economy. So whenever they have commentary on the market, I think it's always good to listen.
Yeah, we've got a good chat coming up later this week about the banks and what we're learning from them at the moment. So we'll look forward to that one. Looking at the local market now, Adam, the S&P ASX 200 finished yesterday higher, up 0.6% to 6,934 points. Materials led the way, with gold miners really the best of the lot. Gold Road Resources, I love a company that actually tells you kind of what it does in the in the title, obviously. And Gold Road, I mean, at least it's got the word gold in there, so it's pretty clear. Jumped 6.8%, and Evolution Mining lifted 7%.
So, Michael, interestingly, shareholders weren't happy with Westpac's results, sending the shares nearly 4% lower to $23.19. Elsewhere, dividend payouts saw ANZ drop 4.6% and Macquarie fell 1.3%. Coronado Global Resources fell 7.1% after abandoning merger talks, and more on that subject in just a little bit.
Yeah, it's a fascinating story, that one. And just globally, China's back and forth really on the zero COVID policy continues to really kind of confuse markets. The oil price fell while the US dollar gained. The Aussie dollar is currently buying around 64.4 US cents. We will be back in a moment with the rest of the day's business news. Adam, Medibank has said it will not pay a ransom to the criminals responsible for the data breach that accessed customers' personal information. It is a very tough decision for a company to make because we've talked about this a lot on Fear and Greed and about the potential consequences of paying a ransom, because in some cases it might not actually work. You might not see that data being protected, and it has the potential to actually encourage other cyber criminals. Medibank says it decided not to pay up because there was no certainty that the ransom would actually ensure the return of customer data. CEO David Koskar says paying up could even backfire and encourage the criminals to extort customers directly.
So Koskar also updated the details of how many people had their data accessed in the hack, and that number is 9.7 million. That is huge. But if there's any upside to it, it was mainly that the information like names, dates of birth, phone numbers, and email addresses that were stolen for most of the people on the list. It has a smaller list of 500,000 people who had their personal medical information hacked. That's 160,000 Medibank customers, 300,000 AHM customers, and 20,000 international customers. I mean, these numbers are still staggering. If you're in that group, the data in the hands of the hackers includes the name and location of your medical service provider and codes that reveal not only your diagnosis, but also what medical procedures you've had.
Yeah, and that is, I mean, you don't get much more personal information than that, do you? And I know we've talked previously about the fact that hackers, particularly when they're on selling the data, there is actually a lower value attached to information like medical data compared to, say, a passport or something that would allow someone to steal an identity. But, I mean, you've got to look at it from the perspective of the people whose data has been stolen. You would assign a pretty high value to keeping a secret the medical procedures and all of those kind of elements of data, wouldn't you?
Yeah, and I think, Michael, it'll be a fascinating matrix of factors that Medibank has looked at. One day, if they chose to publish the decision-making process they went through, what it was that they evaluated and why did they come to the decision they did not to pay the ransom. And in the end, you hope that this just helps to kill that sort of industry where people's data gets compromised like this.
Yes, indeed. Now, Adam, earlier we mentioned the big news in M&A at the moment. Merger plans are off between Australia's Coronado Global Resources and America's Peabody Energy Corp. Now, it would have been a $9 billion merger between Coronado, which is an ASX-listed coking coal miner, and Peabody, which is mostly a thermal coal miner based in the US. Now, the distinction between the two, the difference is really that coking coal is used to make steel, while thermal coal, as the name would suggest, is used for electricity generation.
Yeah, Michael, in normal years and in perhaps normal markets, coking coal sells for more than thermal coal. But the disruptions to the global energy markets from the Ukraine war mean thermal coal is fetching super high prices right now. That means it was a pretty good time for a company like Peabody to expand. But this merger was not to be, although it's unclear exactly what ended the discussions.
You would think that we would have to find out a little bit more in coming days. Something like that just doesn't kind of fall apart without any additional detail. I'm sure some more information will be uncovered.
Let's hope so. My interest is piqued.
Are you being nosy, Adam?
I suppose that's a good term for it. Yes.
Professionally curious, perhaps.
Yeah, that one. I prefer that.
Yeah, we'll stick with that one. We are professionally curious. All right. Now, I mentioned this one at the top of the show. I think this is a fascinating story. Cooper's Brewery has posted results indicating Australians are pulling back on how much they spend on beer. Now, beer is famously regarded as being recession-proof. We drink in good times to celebrate and then bad times to commiserate. But Cooper's managing director, Tim Cooper, obviously it is a family business, says that phenomenon might actually be breaking down. Higher taxes and price rises for aluminium and for barley are making it a little bit more difficult to turn a profit.
Cooper's is a fascinating family business, and it's owned by about 180 members of the extended Cooper family and has 5% of the national beer market. It posted a 25% drop in net profit to $19.2 million for the 2022 financial year. Dr. Cooper says there's some evidence that people are looking at the price of a case of beer and deciding to buy a couple of six-packs instead. Still, with pubs and clubs back in the swing of things post-COVID, Dr. Cooper is expecting sales to improve over the coming 12 months.
Now, Adam, it might interest you to know when I was researching this story, Dr. Cooper, please tell me he is a doctor of beer. And no, he is in fact a medical doctor who has now kind of returned to run the family business.
Well, that's a diverse career.
He is Tim Cooper, MD, as in medical doctor and managing director. That is very versatile.
I wonder if he's ever prescribed beer.
Probably not professionally, but maybe self-medicated. I know I would, if I owned 1/180th of a family brewery.
Yeah, 5% of the Australian beer market.
Yeah, it's not bad, is it? It is, as you say, a fascinating family business. It is just extraordinary. One of those real kind of success stories. Now, Adam, Crown has been fined again, with the Victorian Gambling and Casino Control Commission hitting the casino with a $120 million fine. That is the biggest fine it's ever issued.
The Commission's chair, Fran Thorne, said Crown had let people gamble without a break, sometimes for more than 24 hours. But she did say she was confident that Crown would do, quote, everything it can, end of quote, to make sure these breaches never happen again. Crown is now owned by US investor Blackstone and on probation for sustained failures to comply with gambling laws.
Adam, the federal government is planning changes to immigration rules to help businesses find employees, which I'm sure is very welcome news to anybody running a business and struggling to find workers at the moment. How about this for a quote? This is from Home Affairs Minister Claire O'Neill, who says immigration is a Byzantine mess. Now, this is the same minister, remember, who described the Medibank hack as a dog act. So certainly got a bit of a flair for a good quote there. And the minister has appointed a panel to review changes to how skilled workers can enter the country.
I don't know if Byzantine mess has quite the level of cut through, but let's go with it. It's a good line anyway.
No, you can't imagine too many people on the street going, God, that's a Byzantine mess, isn't it? No, whereas you can picture them walking over going, that was a dog act. Yeah, good point.
So the plan is to axe those long and complicated skills occupation lists that spell out in detail what jobs Australia will let in and instead move to what she calls a demand-driven immigration system. Essentially, what that means is that if businesses need workers, they should be able to get them. It's a long way from being law, though. The panel will present its findings next February, and we'll see where we go from there.
And just staying in politics, Adam, we found out yesterday just how much the Teal candidates spent on getting into Parliament. It was $10 million. Now, May's election saw 16 independent and minor party MPs elected to the lower house. That's the largest number ever, but it certainly cost them a bit to get there. The Teal independents alone spent nearly $10 million on their campaigns, with Wentworth's Allegra spender topping the disclosure list with a spend of more than $2.1 million.
Now, these numbers are significant, Michael. Kooyong's Monique Ryan also spent $2.1 million, while Zoe Daniel spent $1.5 million in Goldstein. North Sydney's Kylie Tink spent $1.3 million, and Mackellar's Sophie Scamps spent $1.2 million. Electoral Commission rules require donors to report cash donations totalling more than $14,500 for elections. We'll hear what the major parties spent in February.
The numbers are going to be big. It's going to be fascinating when February kind of rolls around. And finally, Adam, used car prices are at last falling. We heard from ASX-listed vehicle leasing group Eclipse, which has 91,000 vehicles under management, that used car prices have fallen about 10% since the February peak and will keep gradually dropping.
But it will be 2 years before they return to normal, says outgoing CEO Julian Russell, who posted a 36% higher net profit of $103.3 million. Eclipse wins from higher used car prices because it sells the vehicles when the leases end.
All right, moving on to overseas news now. And yesterday we were talking about Twitter. Today we are talking about Facebook, with more layoffs from the big US tech companies. Meta Platforms, which is, of course, the new name for the parent company for Mark Zuckerberg's Facebook, is notifying employees of large-scale layoffs this week, according to reports out of the US. Meta has 87,000 employees, and these layoffs will be the first since the company was founded by Zuckerberg in his Harvard dorm room.
It could be the largest ever round of layoffs in US tech, although it won't be as big on a percentage basis as Twitter's mass layoffs of half of its staff over just last weekend. Meta's stock price has fallen 70% this year amid competition from TikTok and Apple's new privacy changes that make it harder for Facebook to target users. There's also concern Zuckerberg is spending too much on his metaverse dreams. That's the virtual reality world that's not finding much traction with users just yet.
And finally, Adam, last one, get your orders in for Christmas if you haven't already, because Apple says it might be running low on iPhone availability because COVID has shut down one of its Chinese factories. Apple says production of iPhones is happening at a significantly reduced capacity because of the factory shutdown, which means there will be longer wait times between purchase and delivery of the iPhone 14 Pro and the 14 Pro Max, which is the one with the really big screen.
It's the second shutdown for Apple this year after it lost US $4 billion in sales of iPads and Macs a few months back when factories near Shanghai were closed. Apple relies on China for more than 90% of the iPhones it sells. Christmas aside, this is another part of won't they debate about Beijing's zero COVID policy. There have been mixed messages about it and if and when China will loosen up on COVID zero. And if Apple's statement is anything to go by, it may not be soon.
Yeah, maybe not. All right. Now, up next is the Fear and Greed Daily interview, Adam. And today you're speaking with Paul Presland, the General Manager of Small Business at ANZ.
Yeah, Michael, I really enjoyed this chat. Obviously, small business is a critical part of our whole economy. ANZ has great access to data and what they've been able to see in their customer base over recent years, and including how he's seeing the trading period right now and looking ahead.
Yeah, that's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Adam.
Thank you, Michael.
It's Tuesday, the 8th of November, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.